Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
All right, welcome to the COB. I'm Juliette Sarli.
Yeah, I'm Andrew Gagan. I'm bookending the day today, which is a bit unusual, but not a bad day to do it, in fact.
Indeed. Do you think it was you or International Women's Day or my suffragette purple that hit us at a record?
Well, let's say all of the above.
All of the above.
Yeah.
Let's have a look at the CBO 200 because the ASX 200 above 7,800 points and the CBO there up 1%.
Yeah, that is an impressive gain. Mind you, pretty much following what we've seen on global markets overnight with both the S&P 500 and the Nasdaq hitting new records. We're seeing that, well, we had seen it in Japan. That's actually come off. The DAX in Germany. Everything's going up, Juliette.
Indeed, and getting to our themes of the day, really about hello 7,800, because this is the first time we've seen the key ASX 200 above that 7,800 point level, and it has been widespread buying across pretty much every sector. I think I'm just pulling up the sectors now.
Green.
They're all green.
Yep. Led by the banks.
Led by the banks, which we'll get to in a moment. But another big story today was Virgin Money.
Well, in the financial sector, but yes, finding a suitor. Yeah, nationwide?
Nationwide,
in the UK,
which is Britain's largest, I believe, building society and one of the top sort of 6 or 7 banks as well. So $5.7 billion in cash. It's £2.9 billion bid. It was announced overnight. It would mean that Virgin Money comes off the stock exchange. It's dual listed in the UK as well, and huge soaring here and a huge soar in London as well. In fact, we're going to get a view on that deal in just a moment. But first, let's take a look at the other top stories of the day. Yeah, and we'll just quickly talk about the banks as well, because banking on the banks was our other thing. Jarden saying that banks can continue to outperform. Let's just have a look at the banking sector in general as well, which I think is there when we look at the sectors, because I just wanted to get into more detail about this call from Jarden. Broker Jarden declaring this rally that has sent CBA, NAB, ANZ and Westpac to record or multi-year highs, and they say it has legs because there's upped profit forecasts in recent weeks and they see scope for further upgrades and the positive macro backdrop.
It's an interesting take, because speaking to some of the other brokers and fundies, they're a little bit cautious at the banks at the moment, given those valuations there. But yeah, you're right. The CBA record high, the others multi-year record. So pretty impressive what we're seeing in the banking sector at the moment, which has led the broader market higher. Elsewhere, Juliette, what other tech sector is the one to look at as well?
Yeah. So WiseTech Global up by almost 2%. NextDC and Altium were a little lower, but overall it was a positive session for that. And energy stocks looking really good as well. I think that was another one of the really, really solid sectors, and particularly those uranium stocks. Have a look at Paladin and Boss. All right, some of the top corporate stories we mentioned, of course, Virgin Money, they're up 33%, and just talking about some of the other stories today.
Yeah, GQG Partners, the shares in the fund manager there, off a little after Pacific Current said it had sold its stake in the company.
Magmatic Resources, meanwhile, surged up by about 46%, and this is after Fortescue took a near 20% stake in the copper gold explorer.
Hub24 adding over 2% there, with its chief executive Andrew Alcock, who we caught up a couple of weeks ago after its results, saying it can continue its strong growth into the full year.
All right, let's get to our guest for the COB now, Shane Oliver from AMP. Shane, in a week when we saw that GDP print, and I was reading one of your notes from earlier in the week, the slowest growth when you strip out the pandemic since 2000.
That's right. The economy has literally slowed to a crawl, and were it not for very strong population growth, population's growing about 2.5%, we would be going backwards. And in fact, that's what the so-called per capita recession refers to. And of course, the focus of that slowdown has been particularly on consumers. Consumer spending has stalled. Again, it's going backwards on a per capita basis in real terms. And of course, housing construction also very weak. But you can see in that chart there that we do have very weak per capita spending in the economy. It's been negative now for 3 quarters. Likelihood is that will continue for a few quarters yet. There should be some relief coming through later this year, assuming interest rates start to come down.
Yeah, you talk about that relief courtesy of interest rate cuts. Question of when, of course. Shane, we did get a little bit of commentary overnight from the ECB, maybe pointing to a June cut maybe. Also for the Fed, of course, bets on as to when it's going to go as well. Where do you think the RBA is placed in amongst the other banks that we're seeing at the moment?
Well, yeah, I would have thought that they might have lagged a little bit. Obviously, it being in June, I mean, there's always a possibility that the Fed and the ECB could go earlier, but it looks like they still want a little bit of time. You heard ECB President Lagarde saying that by June they'll have a lot more information, only a little bit by the next meeting in April. So June seems to be the date that everyone's centering on. We thought the RBA could start to cut in June, and we still think that. But by the same token, if they want to follow what the Fed does and lag, not that they always do that, they haven't done that in all cycles in the past. We had a tightening cycle in 2009 that the Fed totally missed out on. The Fed had a tightening cycle from 2014, in fact, that we totally missed out on. So, and as you can see in that chart there, the Fed funds rate line is the black line, obviously now 5.37% to take the midpoint of that range. And there was about 30% of central banks globally started to raise rates ahead of the Fed in 2022. And you've now got about 20% of central banks already cutting rates. So central banks don't always automatically follow what the Fed does. So our base case remains we will start to see an easing here in June, but I would concede there is a risk that that could be delayed till August. But whichever way you cut it, falling inflation globally, slowdown in the economy, all of those things I think are consistent with rate cuts here in Australia this year.
And when you drill down into some of those reasons why that rate cut could be pushed out, I mean, the household income to saving ratio increased, but is that just all of us hiding our money going, we don't want to go out because the RBA told us not to? Or what are you seeing in terms of real spending?
Well, to be honest with you, I think that was a bit of noise in the system. There was a couple of things that drove that. There was a big increase in, there was an increase in public sector employment associated with the voice. People who got jobs who wouldn't have otherwise had them. There was a rise in public sector pay. That also boosted the public sector wage numbers overall, whereas private sector wage numbers are actually slowing down. And the other thing that boosted the number in the December quarter was tax. Tax had a big rise, tax payments had a big rise in the September quarter, and I think that was partly due to changes at the tax office in terms of deadlines for getting your tax return in. And of course, that returned to normal after people brought forward their payments in September, and then you got a reduction in tax payments occurring in the December quarter. So all of those things sound a bit aberrant to me. I don't think they're going to be sustained. But of course, as consumers remain cautious, it enabled income to rise, and of course that went to savings. But the downtrend of the savings rate remains. The pressure on household savings is still there. Household income is still there, with a very high tax share and a very high share of income going to mortgage payments. So I don't get really excited about that slight bounce in the savings ratio. I don't think it's a reason why the Reserve Bank would delay.
All right.
Shane, what do you make of that asset price action at the moment? Everywhere you're looking, in global equity markets, gold, Bitcoin. What's your view on where things are going at the moment?
Well, in a very simplistic sense, in 2022, we saw interest rates rise and interest-sensitive assets fell in value, shares, and of course, Bitcoin. Bitcoin had something like a nearly 80% collapse from its high in 2021, I think it was, to its low in 2022. So Bitcoin is the most extreme interest-sensitive asset, if you want to call it that, that's out there. And so it's no surprise now that it's also going to the moon again, or attempting another moonshot. And of course, gold is doing the same thing. It's another highly interest-sensitive asset. So just as shares have gone to record highs, you are seeing record highs in these other assets. But because Bitcoin tends to be supercharged one way or the other, both up and down, it's generating those super high returns compared to where we were, say, 12 months ago. I think it's up 200% or thereabouts. But I think it's really just a reflection of interest rate cuts on the way, pushing assets, or if you call them that, which are interest sensitive. And of course, Bitcoin is the most extreme version of that.
All right, Shane, it's the weekend. What's on? Taylor Swift has left us. Anything exciting? Any books? Anything you're watching?
Listening to. Yeah.
Well, I was listening to this thing, watching this thing on Netflix called One Day.
Oh, I'm watching that.
Yeah, but which I love, but it got to the second last episode and had a rather sad ending, and I don't think I can watch the final episode. So it got too depressing for me. Sorry to spoil it for you, but it got kind of depressing, got a bit too sad for me. So interestingly, I've had a bit of a right-wing turn lately. I'm reading Ayn Rand's book, The Fountainhead. I've read so much about it, and I sort of thought, well, I should try and look into this and see what it's all about, even though it came out way back in 1943. So that's the book I'm currently reading. It's supposed to be a libertarian book. I'm not really a libertarian, but I do understand the power of free markets and certainly support free markets. But we'll see how that book goes. It's literally a tome. I think it's like 700 pages of this extreme minute print. So I only managed to get through a couple of pages a night.
Yeah, I've got to say, I did attempt it myself. Never got to the end though, but probably not a bad time to do it given the number of libertarians that are floating around at the moment and what's going on in the world. Good time to catch up on that historical tome too. Shane, always great to catch up. Thanks for joining us from AMP.
Thanks, Andrea. Thanks, Juliet. Take care.
Shane. All right. Well, the stock of the day was Virgin Money UK, and you spoke to?
Yeah, I spoke to Dawsey, Adam Dawes from Shore & Partners and Junbei Liu from Tribeca for their view.
I think it missed probably 90% of its earnings, and it's been very challenging stock for many years.
And this is changes as well, trying to get it.
That's right, trying to change it into more. Yeah, Clydesdale, that was the original name. That's right, and they changed it to Virgin Money. But then it's been very, very challenging. It always looked really cheap relative to Australian banks, but it's not Australian bank.
Yeah.
So Adam, I guess, well, if you're a shareholder, you'd be pretty thankful this is eventuated.
Of course. Then. In fact. Now 3 of the top 100 companies are under takeover at the moment. We've got Altium, Illumina and Virgin Money now, all in the top 100. So there is more and more of these companies getting sucked up by lots of money that needs to find a home in Australia, obviously. Definitely sell it now. Yeah, definitely. You would, time cost of money, this might take 3 months, 6 months to happen. So it's going to take a while. I would say it's a sell and move on to bigger and better things.
All right, that was the stock of the day. And remember, our annual subscriber survey open until the 13th of March. And of course, we'd love it if you can take a couple of minutes and fill it out so we can make ausbiz better for you.
Yeah, and it's worthwhile doing it because you're in the chance to win a investment portfolio from MPC Markets worth $5,000. Other prizes as well. Head to ausbiz.co/survey24.
All right, let's have a look at the after-close leaders on this record day on the market. Virgin Money we've covered quite a bit, surging on the fact that it might actually be leaving the ASX soon, up 33%. Life 360, Illumina, Polynovo and Paladin Energy all higher. Worth noting a lot of those uranium players did very well today.
On the downside, let's take a look. Core, it's up, it's down today, given where those lithium prices are going at the same time. Magellan, also, that's been on the move of late, as has Iris, and some of the financials also rounding out the top 5, the bottom 5, I should say.
Yeah, I think Insignia was ex-div as well, so that's probably explains that one. Let's get to the small caps in terms of the leaders. Kinetico Energy, Aurora Energy, all some very big moves there.
And on the flip side, taking a look at those, the negative, maybe there are no negatives today. Oh, yes, there are. Your Bougainville Copper, that's come off 10%, as you can see. Also, Miso Blast among those falling.
All right, a big night on Wall Street, the US jobs data print coming through, and then a big day in China as well with that inflation print coming after the NPC, where they, of course, targeted that 5% growth as well.
All right, and in terms of what we can expect next week, we've got March consumer confidence numbers. It's interesting to see where that's sitting at the moment with the prospect of interest rates coming, whether that's affecting overall confidence. Key numbers out of the States, certainly with an inflation read for February, and also locally, Juliet.
Yeah, we've got CBA's household spending data being released and US weekly mortgage finance. So another busy week. We'll bring it all to you, of course, on ausbiz. But for now, it is Friday. It's a record high.
It is a record high. And before we go, a big shout out to Leah. She has been the cornerstone, the bedrock of ausbiz for ever since we got going here in fact. And sadly for us, it is her last day. We should have got her in here. And,
I don't think she likes being on camera.
No, she doesn't. That's
unlike
exactly why
you
she's
and I.
behind the scenes, indeed. But it's been stellar, and we couldn't have done it without her. So big loss for us, and we wish her well in her
we're going to
new
miss
endeavours.
her a lot. Congratulations, Leah. We will miss you, but stay in touch, of course. All right. Well, on that sad note, we'll say goodbye, but happy for your investments that are at record highs, of course, with the ASX 200 at 7,800, more than that, and the CBO 200 also having a good session as well. We'll see you Monday.
See you then.